We don't want to ruin your Christmas cheer, but we're going to give it our best. Oh, college try. You've only got 2 weeks left this year to improve your tax situation.
Here's how I'm looking at this.
Yeah.
You could look at Mr. Glass Half Empty, or we're going to go glass half full. And try to get you a little more in your last 2 weeks of the year. Last year, the average refund was about $3,000, but there is still time to get more money back. Financial contributor Carmen Wong Ulrich is here with some just-in-time tax tips.
Thank you, Erica, for putting a positive spin
on all about the positivity
segment.
Elephant in the room right now. Nobody likes to talk about taxes, but since you're here,
we do like,
love to talk about
it. Money. Because I'm going to talk about it, and I'm going to talk about how you can save more money.
Okay, well, there you
course.
go. Now I'm sold.
Can we get started?
Go for it.
Let's get started. Medical deductions. Please understand that most folks would be able to deduct your monthly premiums. And we know that this year, like every past year, the past couple, 3 years, we've been paying more and more in premiums, right? But don't forget that. What about your co-pays to the doctor's office? What about other things that you can get done before the end of the year, procedures that you're going to have to pay out of pocket? Pile all those together. If they're more than 7.5% of your adjusted gross income, then those are deductions that you can take that can lower the amount you're going to be taxed on.
I like that one.
Let's talk about charitable deductions. A lot of people do it, but there are some ins and outs, some different angles here.
There's something very interesting here, because I do this, I know this, donating to charity with your credit card online through the website. If you do that this month, and you can claim it as a deduction, even if you pay the bill in January. So just keep that in mind.
Because you want to make sure you pay your bill in full.
Exactly. And if you're 70 and a half and older, you can give $100,000 out of your IRA to charity. Now, this is not a deduction, but that money gets shaved off your adjusted gross income, so you're not going to pay taxes. When you take money out of an IRA, you pay taxes on that, but you don't if it's donated to charity.
Okay. That's 70 and over, you said?
That is 70 and a half and over.
We also talked about credit cards. We talked about your IRA and your 401k. What about longer-term tax benefits, though? Yeah,
I mean, this would be your retirement contributions. And when I say longer term, it's like killing two birds with one stone.
Yeah.
You're actually giving to yourself in the future, and you're putting away money, but you're also getting a deduction. Now, this is the thing. Your IRA contributions, we have the maximum contributions of $5,000 and $6,000 if you're age 50 or older. Those are deductions for the IRA. Now, your 401k, this has changed for this year. For 2012, it's gone up by $500, so it's now $17,000 that you can contribute. And also, if you have a SEP, this is a simplified employee pension if you're self-employed, this is a percentage of how much your company makes, so that goes all the way up to $50,000. But don't forget, if you are self-employed too, all the deductions you can take for everything from, driving to go meet clients, taking people out, your home office, those are huge deductions every year.
What's the big, I guess, the glaring mistake that most people, the biggest mistake people make around this time, where they are really kind of sacrificing themselves and not getting as much money back as they could?
Well, actually, the biggest problem is people getting too much money back.
Yeah.
That's the biggest problem, and this really, really irks me, because here's the thing. The IRS, the government, should not be your savings account. Okay, you can use that money every single month. So if the average refund is getting up to close to $3,000, you need to make sure that you have the right amount of in your W-4. Do not have the government save your money. Make sure that you're doing that on your own, and if you owe a little tiny bit, that's okay.
And not even save it. My father-in-law, who's an accountant, always says it to me. It's not even them saving your money. You're giving them an interest-free loan. So ideally, do we want to sort of zero out when it comes to tax time? You
want to be as close to zero as possible. Now, the IRS, you go to irs.gov, has a withholding calculator that you can put in all your personal information. It'll give you the real idea of here's where you would come out pretty much even.
Okay.
Absolutely. Don't give them that free money.
IRS.gov, yeah. You know what?
I know you're going to head there right now, Raggy.
I am, to be honest. You think I'm not interested in this?
We're going to open up these laptops, and we're going to see who can get that URL open faster.
I'll walk you through it.
Carmen.
All about the government not having my money. Carmen, thanks. Good to see you.